Hi, welcome to a weekly outlook. This is Kim speaking on Monday, the 23rd of October. So most of Monday's gone actually as I'm recording this. It's around about 6 o'clock in the evening. Just really wanted to go over this week's key fundamental data that's likely to come out, and it is very key this week, and it could be quite a turning point for the euro for a period at least. And then we've also got some significant data coming out for the Canadian dollar. So let's just run through I'm just going to bring up this, be a bit of a cheat sheet here and look at what we've got ahead of us. Lesser interest, but still important and quite significant, is the French and German flash manufacturing and services data that comes out tomorrow morning, 8:30. Used to give around about a 20 pip move in this with this news, and can still do if it misses or hits or misses. Well, not necessarily so much if it hits on target, because that's already built in there. But if we get a bit of a miss, we could see a 20 pip move. The 9 o'clock figure really gives very little movement whatsoever. More important data though comes in from Wednesday onwards. Inflation on the Aussie dollar may give us a little bit of a kicker, but really the eyes start appearing watching the GDP for the UK at 9:30. That's expected to be increasing at the rate of 0.3. Now, just bearing in mind we're sort of running towards the end of this month, and it's not long before we start seeing the Bank of England meeting. So any sort of growth bigger than this 0.3 may be seen as positive and just increase the chances. I think it's sitting something like 80% chance of an increase in next month's meeting at this stage, but things may change before then, of course. So that would be quite a significant number this week particularly. Then ignoring the core durable goods, etc., the most important figure for Wednesday really is the Canadian data coming out. The Canadians increased interest rates back in 2015 following the drop in oil prices. They've already taken back 2 of those interest rate decreases, should I say. So they're back on par with the normal rates, effectively, or their original plans. Now, it was expected that they may continue to do something here. The probability is now sitting around about a 20% chance of an increase, which pretty much would suggest they're not going to do anything. But there was a suggestion they wouldn't do anything last month, but who knows? We'll see. But certainly 3 p.m. Wednesday, watch out for the fireworks, I should say, or lack of. Then really we're then looking through crude oil inventories later on in that day. May create a bit of volatility there, but it seems to have gone off the boil somewhat now. And more significantly comes into the minimum bid rate on Thursday, and in particularly Draghi's press conference. Dr. Doom, as some people call him in our trading room, here on Thursday afternoon at 1:30 there. Now that's a much more significant meeting, because traders are waiting to see what's happening, whether they're tapering the asset purchase even further, whether they'll give us numbers. It's currently sitting at 60 billion a month. Is this going to drop down to 20, 40? There's all sorts of figures going around the markets that I've seen. Now, it really doesn't really matter so much, but it just depends on how dovish they are. And more importantly, and the time scaling, if they start giving a specific date by which they're really planning to finish these plans altogether, is another matter. And that in itself, some people are not expecting interest rates to increase until they've stopped tapering. Well, in which case you could see no interest rate for the next year or so. So, and that's the significant thing on that meeting. So it could be a bit of a kicker for the euro come Thursday, one way or the other. We'll see. And finally, on Friday, GDP, US GDP, again, previous was up, rated to 3.1% already. Expectation 2.7. That could be quite significant this time, particularly after they've had storms, etc. Would be quite a significant number to watch out for. But of course, because of the storms, they've got a good excuse if they miss. So let's look at the technicals. The euro dollar sitting here, it's been sitting here broadly in quite a range over the last few weeks, just over a month now actually. It's been sitting in that range. Every time I get a bit bearish on it, it looks like it has a bit of a kicker and turns around and rallies up, and then it's sold off again. It's certainly sold off again here. Now, Dr. Doom on Thursday, Draghi, could see it could seal the death of it for a short while at least. It's probably too strong to where they really want the euro to be sitting, and I wouldn't be shocked if we see a bit more dovishness coming through from the statements, and a bit of a rollover. However, let's just see what it gives us and not try and double guess it. So that's a key point there. So looking at the, as I say, purely technicals, I've got a bit of a line in the sand looking around that sort of 117 area, which I'm sure other traders have. One thing I would say, I did look at the commitment of traders contracts, and the just to give us an idea of where the sort of non-commercial positions are sitting, and they're still quite bullish on the euro. So, well, they can be late, and they can be always a bit slow in changing over. It takes a bit of time. That was last Tuesday. Things may be a bit different to last Tuesday. Last Tuesday we've seen markets probably turning around a little bit, or potentially. So anyway, there's no sign of a let up on that front at the moment. They're really quite bullish, relatively high numbers. So well, certainly they're not expecting it to run over, but it certainly could do when Draghi speaks. Okay, let's have a look at the pound. Pound here, technically, well, from a weekly perspective, again, it's just been consolidating. Sorry, just gone across this weekly chart first. I was looking last week at this sort of a bit of a trend line that's still sitting in there. That's, well, still sitting there. You haven't broken that trend line coming through there yet. Getting a little bit more bullishness here, as I said, with the GDP data coming out midweek. That could be, if that comes out solid, we could see the pound coming back, at least that regression trend line still sitting down, the black line running across the across up of my chart here. Maybe some more. It is holding up reasonably well at the moment, but we'll just see how it runs. Yeah, I'm sort of, as I say, it's quite mixed because it's been so mixed. Looking next day or two, if it closes anywhere near where it is at the moment, it's putting a bit of a bullish signal. If it can get above that 21, then it sort of more confirms that sort of more bullish signal. But still, really, to get significantly bullish, we need to be crossing over this 500 moving average, and as I say, this regression line that's running straight up there. If it starts pushing up there, well, then it's above the monthly pivot as well, and I'd be much more bullish on it. But certainly got the potential. So I'm erring that way a little bit. Of course, that could be dragged by the euro. Now, dollar yen saw a gap up in the markets. It's a slightly different size of gap depending on which broker you're looking at. I'm just looking at a single broker here, but my composite is slightly different size gap, but there is a bit of a gap at the moment. But the important thing for me was we eventually closed above that trend line that I drew on here a couple of weeks ago. It's closed. It's sort of had its attempt. It's now closed above there, and it does look like there's potential for further upside. Maybe a little bit sharper move here, so a little bit of a retracement. As I say, we could be filling the gap, but there certainly is the potential. The only thing that may stall it a little bit, just coming back to the weeklies, yes, I'll put the horizontal line on there. There we go, is that horizontal sort of level of resistance previously. It had 2 points round about that level. It may just stop things, but a break and push above there would see me more bullish on it as well. I mean, it's already, as I say, become bullish in terms of what it's done, breaking the trend line, etc. It just sort of would increase the odds of maybe even a bigger move upwards, back to the prior highs, possibly at 118. Okay, that's dollar yen. Let's slip down there. Aussie dollar. One thing I should have mentioned, and what I will do whilst this was just loading, was that they should be, in the US, they should be trying to finish the 2018 budget. There's a lot of to-in and throwing and whatever else. It's possible that it will be released somewhere in the next few days, and it will be published and voted on, etc. So that may also create a bit of volatility. Anything that's positive on that will obviously strengthen the US dollar a little bit there and may support it. Anything if it's just not being agreed to, it puts pressure on the dollar, of course. So Aussie dollar, from a weekly perspective, just come back to our lower band here, just broken the 21 moving average a little bit, maybe finding a bit of support. It's early in the week, of course, but just looking at the dailies here, and it's really, to me, it didn't have the legs to push back up towards the monthly pivot on its last attempt last week, and it's just sort of fouled Friday, and it really looks relatively weak. Maybe Wednesday's CPI data may change that a little bit, but at the moment for me it's still looking on the weaker side, and maybe the 200 at some point, daily 200 will be a target. Canadian dollar. Now it's hit its weekly 21, which I've been talking about for a couple of weeks now. Well, it looks like it. Actually, it looks like I'm just having another look at it, and it's just a slight air kiss of it, but it's pretty close to it, if not hitting it. So got the potential maybe to push up towards it, and it's really now what happens. As I said, we've got the Bank of Canada meeting on 3 p.m. on Wednesday. That could see if any softening of tone or whatever that comes from that meeting may well push through. It's actually the bank. I was going to say the bank manager for a moment, but there is a Bank of Canada press conference at 4:15 on the Wednesday, and that may see a sort of a bigger move than perhaps just a statement itself. So I should be watching out for that, because any dovish tones could see the Canadian dollar soften up a little bit more. Okay, that's pretty much it for me for this week. I've got no more to add at that moment. I'm still favouring, if it, especially particularly if the Canadian dollar breaks this weekly 21, I'm still favouring the further upside there. It's looking quite good. It's broken out of this very tight zone, broke through on Friday, pushed up so far. I'm still sort of favouring maybe a bit more upside yet as we head towards the end of the month. That's it for me. Have a great week. I'll speak to you next week. Bye for now.